Today we're having another call with David Jaffee. He's the main man at Best Stock Strategy on YouTube. Hey, David, I wanted to start asking you right away, what trends do you see in the current market where you would say, hey, things are changing in this department?
I see a lot of volatility, especially recently. I think starting around August 1st, the market is down around 7 or 8%. And then even yesterday, we are recording this in, I think, like October 7th or 8th. But the last trading day on Friday, the market experienced a volatile day where from the high to the low, it was up or down around 2.7%. At one point, it was down like 40 points or close to that. And then it at one point was also up over 60 points, and then it closed up around 50. So I think that expecting a lot of volatility is going to be the norm. And I also see that there's going to be more of a downtrend. It seems that starting around August, the market is down over 5%. So I don't think that it is. I do think that it's likely that the downtrend would continue in Q4 of 2023.
Now that people know about the trends, the question is, how can they capitalize on the trends? I mean, because typically it's actually good if the market is very volatile, right? That's actually a good thing, right? Because you can trade to the upside or the downside. So what do you recommend, like what people can do to capitalize on this potential opportunity?
I think if you're someone who's not extremely motivated or passionate about the stock market, then I usually recommend that the best thing to do would be just to simply buy an index fund. You can buy something like QQQs, which is the NASDAQ, and it's the top 100. You can buy SPY. You can buy something like VN, I think it's VNK or VNQ, which is comparable to QQQs, but it has more of a technology focus and it has a higher beta stocks, which means it has more volatility. But in general, I think just simply purchasing an index fund for probably about 70 or 80% of people is going to be worthwhile. Additionally, if people wanted to get a little bit more technical, then they could sell a put option, like an at the money put option. So for example, let's say SPY is trading at just, let's say 400, they can sell a put option with a strike price, which means that they agree to purchase SPY at 400, which means that it's at the money. And the advantage to doing that is they'll be able to collect a few dollars in premium. And then if they actually take ownership of SPY, then instead of buying it right now at 400, which is the current market price, they'll be able to purchase it for $2 less. So, basically like half a percentage less than the current market price. But in general, buying like SPY, QQQs, something of that nature is probably the best bet. And then simply setting it and forgetting it. Like I said, they could sell some options. You can sell some at the money put options. And then if you're assigned, you can then sell some out of the money call options. But I think in general, it's best to keep things relatively simple. Then you can get into hedging and things of that nature, which, if you want, I can touch upon further.
Oh yeah, definitely. A lot of the people that are following us, they are all expats and nomads. So it's like to them, they want to find a path that works because they have their own businesses. So, and we talked about this on our previous calls, that it's just very hard to day trade because it takes so much time, so much attention focus, right? I mean, technically you can make anything work, right? It just takes a lot of sacrifice and stuff. But what the people that we are working with are looking for is probably more like an opportunity that you just pointed out, where people can invest, let it sit, and then kind of see what happens. What do you think about the crypto market? I just wanted to ask you about this point as well, because not much has been going on in that department recently, right? I mean, they're expecting an uptrend, but it hasn't really happened yet. What are your thoughts here?
Yeah, that's a great question. I wanted to touch upon and add a little more detail upon a few things that you just said. So regarding day trading, there have been two studies, one in Brazil and then one in Taiwan. One of them indicated, I think it was the Brazilian study, where they looked at like 360,000 day traders. And it said that 97% of day traders lost money, and those that didn't actually earn less money than minimum wage. And the Taiwan study said that 99.8% of day traders lost money. And they actually said that that number is an overestimate or rather an underestimate, meaning that more than 99.8% lost money. And they also indicated that there's no learning components to day trading. And I think that the reason is that there's no, with day trading, it's basically like a 50-50 bet. But the problem is that if you lose money, if you lose 10%, then algorithmically and like from a math perspective, you actually have to earn 11% back in order to get back to even. So if you have a 50-50 bet or 50-50 proposition, but you don't have like outsized payoffs where you win more than you lose, then it's virtually death by 1,000 paper cuts. Now, if you want passive income, I would definitely recommend, and again, I'm not a financial advisor, although I used to work as an investment banker and I used to be certified, but I'm not certified right now. I don't have my Series 7 or 63 anymore. It's not active. You could, just buy an index and then sell covered calls against it. I think that that's good. You could probably earn like an incremental like 5% a year, or maybe even 10%, somewhere between 5 and 10% by selling covered calls. Now, regarding crypto, I actually think that crypto is a decent opportunity. I don't own any crypto, but from looking at the volatility of crypto, I mean, it used to be like so extremely volatile, where you can have 10% price moves in a week, or even in like
a great
day.
time. It was a great time. I even made money.
But remember that the losses hurt. So people have loss aversion, and I think they did a few like psychological studies where the strength of the losses, they're like 4 times more painful than the elation and the joy from the gains. Which means that, okay, if you make a little bit of money in crypto, then those people who lost that same amount of money that you gained are actually feeling intensely more pain, which means that I think it's vital that to follow what Warren Buffett said, which is the number 1 rule is to not lose money. And the number 2 rule is to follow the first rule, So you have to make sure that you're relatively, that you're not overly aggressive, because I would love to make as much money as possible, and I would love to make millions of dollars a year from trading and investing as well. But your first priority should always be to not lose money. Now, regarding crypto, I think that it's been trading between about like 26,000 and 30,000 relatively consistently over the past like 6 or 8 months. For me, I kind of prefer to trade options because there's more strategy involved in options. Whereas if you buy and hold something, unless it's like an index, where in general the stock market tends to go up, unless you're in an economy like Japan, where the market basically hasn't moved. But again, even in Japan, you could have sold some covered calls and generated some decent income. With crypto, I'm not sure if there are options on it. What I would, though, be interested in doing if there were options, and I'm not certain about that, is you could sell a put option on something like Bitcoin at a strike price of, let's say, 25,000, which means that you would agree to buy Bitcoin at 25,000. And then if you are actually assigned and you take ownership and therefore you own crypto at 25,000, you can then sell some covered calls. But buying crypto outright, it's a little bit of a speculative bet. So it's kind of like owning something like gold, which, gold has been around for thousands of years and crypto hasn't. So gold, in my opinion, is a little bit more safe, and it's also a hedge, like, against inflation, etc. But, I don't think that crypto is the worst thing by any means. If you wanted to invest like 5% of your portfolio and put like a buy order at crypto at, a price of like 25,000, if it falls to that price, then so be it. I don't think it's the worst thing. I think it's much less risky than it used to be.
I see the same picture too that you're talking about. It's been very, very, very consistent in terms of pricing, whereas before, like, in my opinion, the best time in crypto was the ICO time, 2017, 2018. It's what I call the golden years of crypto, It's probably the same how it was with eBay, or with like the internet stocks when they started, but now it's like you said, there's not that much room for huge gains, but who knows what will happen in the future, right? Now, if you can please give us like some final tips and also perhaps like trends that you're seeing that are developing right now or that could potentially develop in the future, where you would say, okay, our audience could potentially capitalize on those gains. Are there any trends that you are seeing currently?
On crypto, when you mentioned like 2017, I started smiling because I think at that around that time, crypto went from like 5,000 to like 18,000. And then I remember at that time I was living in Icon Brickell, which is in Miami, and I knew that crypto was in a bubble because there are like a lot of wealthy men who live in Icon Brickell, like older men. You have like a lot of men who are older who gravitate towards like younger women. And I remember being in the elevator, and you would hear these women tell them that their sponsor was paying them in crypto, or that they were requesting that their sponsor pay them in crypto as opposed to dollars. So to have like a 20-year-old girl, ask their 60-year-old sponsor to pay them not in dollars but in crypto, I kind of knew that at that time we were in like a bubble, and that it was only a matter of time before there was a price correction. Now, regarding like future trends, I I think that actually like TLT. So, and I know that bonds are not sexy; they're kind of boring. But I remember when TLT was trading at about like over $170, and currently, like at this specific moment, TLT is trading, I believe, under 85. So, if you wanted to, you can wait until like TLT trades down to like 82. Maybe it will, maybe it won't. Or you can just simply buy like a few hundred shares, or depending upon how large your portfolio is, and just simply hold on to it because TLT does have a dividend. So it's a long-term play. You can own it at around 85. Then you can sell some cover calls against it to reduce your basis. And you can just simply hold on to it. And we do know that even though interest rates might go up in the future, in which case the price of TLT will go down, we do know that historically, like over the past 30 plus years or so, the interest rates, if they normalize back to about like 2.5 to like 3%, then TLT will start trading around like 110, 120, in which case you'll get the capital appreciation. You'll also receive the dividend payout, and you can generate additional income by selling cover calls against it. But as far as like making predictions, I don't necessarily, I don't really see that much. I think that right now the market is uncertain regarding which direction it wants to go in. And I don't want to be foolish enough to like make predictions just for the sake of making them, because I do know that they're going to be wrong, because no one can tell the future. If they could, I
Right.
would be picking lottery numbers. But yeah, I think like TLT is pretty good. Maybe something like RTX, Raytheon, it has like pretty consistent government contracts and predictable revenue. And just a few months ago, it was trading over $100, and then now it's currently trading in the low 70s. So I think something like RTX as a long-term play, and TLT, those are pretty good bets and pretty safe bets in my opinion. And hopefully in like a year or so, we'll see if I'm right, and if I'm wrong, then I don't have a problem coming on and saying, "Hey, like I screwed up, I was wrong."
I appreciate that. And inflation's been crazy and people need more income now than ever before. So I
Yeah,
hope this was helpful. Thank you so much for your time and information, and we sure we'll talk soon. Thank you, David.
always a pleasure.